Hi everyone, welcome back to Birich Podcast. In this session, we are going to discuss about the price to book value. So, when the price to book value is more than 1, the bank is considered as overvalued bank. When the price to book value is less than 1, it is considered as undervalued bank. So, on what matrix price to book value is calculated? Uh, which factor influences the price to book value the most?
What is book value?
For a bank, the assets will be the deposits which the customers of the bank give, and the liabilities of the bank means the money which the bank is borrowing through bonds. So this constitute the book of the bank.
And that's all bank businesses. First, you have to understand bank compared to all other businesses. Why don't we take Tata Motors price by book when why are we looking at that? Because in something like a Tata Motors, which is a non-banking company, which is a manufacturing company, its asset classes and liability classes are murky. So their book value doesn't reflect everything.
Okay.
So we are more worried about what is the earnings, right?
Yeah.
Of the company. That is more important. For us here in the bank's case, everything the bank has is related to fulus. What does the bank do? Someone deposits money, he takes that money, in turn lends it to someone who wants the money, takes interest, keeps some of it for his own profit, and returns the rest of it as savings interest to the guy who deposits the money. The only liability is if the bank issues bonds, right, to raise funds. Let's say there's not enough deposits coming and it needs to raise funds. It will issue bonds, saying I'll give you bonds for 9%, 8%, and then take that money it raises in bonds, again lend it.
Okay.
Right? Into different asset classes, and it again generates money and returns the bond interest to the person who borrowed the bond. So that's all it does. So everything, as far as the bank is concerned, it's all in its book. So if you look at the book, when the price, whatever the market is trading price, divided by the book value, right?
Book value means whichever
They'll be written in the balance sheet. Will be written book value per share, like earnings per share. They'll total it and they'll divide it by the number of shares. You have a number, and you take that and you divide it. You will get this ratio. And if that ratio is 1, that means the market is thinking the bank at its current operations, the way it's being run by the managers, that it should be equal to the book value. That means if the bank decides to get dissolved and they pay everybody their money back, each shareholder will get exactly the book value.
Okay.
And if it's trading above book value, that means the market feels this bank is a very great bank, like HDFC, ICICI. We see it will be trading sometimes 3 times, 4 times book. That means the market feels there's so much growth potential in this bank.
Okay.
Like how we see the PE ratio going up, no? So same way in banks, HDFC, the foreign investors feel the bank is going to grow so well that the book value will catch up to that. So before it catches up to that, I will go ahead and take advance booking. And they shoot up the price. But we as value investors think it's overvalued, like how we think in PE. Same is true in reverse. If the bank is trading less than book value, that means if the bank is dissolved, if I bought share for 50 rupees and it's trading at half, I'll get 100 rupees. So that means the market is not thinking this bank is going to do great, or the guy whoever is running the bank is not going to do a great job. So you have to take a calculation and a calculated risk and say, okay, the market is undervaluing this and I will buy it. So this is a way to analyze it. And it's only true for banks. Other than that, analyzing book value to anything else is of no use. Yes, it's a metric, but it's not a great metric for seeing evaluation to see if there is value in the bank or any other company to buy if it's a non-financial company.
So when does the book value increases?
How will you increase book value in a bank? You tell me. When you know all the assets, you listed out the assets.
The share price should be increasing because the numerator by denominator price.
It's a numerator by denominator. You are talking about how will the book value increase.
The assets of the bank should be more.
Correct.
That means the depositors.
The assets of the bank grows. So all the things which you consider assets in the bank, the deposits, the loans, everything, those are growing. The book value grows.
Okay.
If the book value grows and the price stays constant, then the ratio will come down. So let's say HDFC Bank's price stays the same, but the book value keeps on increasing.
That means the depositors are...
Yes, the bank is expanding. They're opening more and more branches all over India, all over the world. More and more people are depositing money. Then the book value of HDFC will go up. As it goes up and the price doesn't change, the book value will start coming down. But usually you don't see this happening. What you'll see happening is the price moving. Book value will move very slowly.
Yeah.
What we'll see huge fluctuations is in price. So you'll see in India, like Albin will say, "Inki bank nifty achitanga sir."
Yeah.
So that means what? Foreign investors, FIIs, who are investing in the short term in Indian market, feel that Indian banks are not going to perform well. Could be any reason. Like the finance budget wasn't great, or
The
the
interest rate cycle also.
correct. The rupee is not going in the correct direction. So they decide to dump the bank stocks.
Okay.
When they dump the bank stocks, then you'll see the price moving down. Otherwise, you will not see huge corrections in these banks. You will only see the price always ticking up forward. Like HDFC, the chances of buying HDFC at book value will be very dim. Maybe during the COVID crash, you would have maybe seen HDFC coming all the way down towards book. Like IndusInd Bank went once below book value. I think it went down to always 350 rupees or some 400 rupees it went. I bought lots of IndusInd at the time because the market was for some cuckoo reason thinking IndusInd is going to disappear. IndusInd is not going anywhere. So keep this in mind. We will only have this confidence if you know about the bank and you know who's running the bank and you have confidence in the team and the bank. Otherwise, just looking at price to book ratio and investing in a bank is not a wise way to invest.
Okay.
All right?
Yeah. So I hope that this video was informative and you had some knowledge about price to book value. If you found this video useful, please share it with your friends whom you think it will be helpful for them. And please subscribe to this channel for more kind of videos. See you in another episode with an interesting topic. Thanks for watching the video.